So hello guys, welcome back. So today I'll be doing something different off the topic, not related to CA, CS, etc. Today I'll be helping to spread financial awareness among people. So we'll study what is debenture or bond. You can call it whatever you want. Debenture, general knowledge. Okay. Now I want you to imagine a situation. You're going to shop in Walmart. You have shop, now you go stand and you bill your items. You purchase a lot of items, you get a bill. Why do we get the bill? Simply put, bill is a proof that you have to pay so much money to Walmart for the goods you have purchased. And you might have seen your bill stamped with paid. That means that it's a proof that you have paid the money. It's as simple as that, right? Debenture is also like the bill we just talked about. You invest money into the company. The company issues what is known as a debenture certificate or bond. It's simply a certificate of loan. Now what does that mean? It is a proof that the company has taken a loan from you. Simple as that. It's also a guarantee that you will be repaid after a certain number of years. Also, you will be paid a fixed percentage of interest. Debenture certificate. Debenture certificate is better to understand through an image, right? So let us go. You see, this is the company's name. The company is issuing a debenture to this person, okay, and it's issued on this date. Simply said that this company owes so much amount to this person. That's it, nothing else. Now how much amount? £5. When will it be repaid? 10 years later. Okay, dated on 8th Feb 1958. So from this date, after 10 years, this company owes £5 to this guy. It's a proof that this guy has invested money into the company, and then both of them will sign. So now that you have understood what is a debenture certificate, you might as well understand what is this value. This value is known as face value. Just keep the name in mind, we will explain it. Face value. It's a value printed on the debenture certificate. Right? It's a value printed on the debenture certificate. As simple as that. It is not the value that is filled in. It need not necessarily be the value that is filled in. We'll see that later on. But it is a value that is printed on the debenture certificate. It is not the actual value, but it's only on paper. It's existing only on paper. Then why is it printed? Why can't we just print the actual value or the market value, which is more necessary for trading? The reason is interest is paid at a percentage of this face value. It's not paid as a percentage of market value. Simply said, or to summarize, you can say that market value is for buying and selling. Face value is for interest calculation. Okay. Now how can I buy debenture? Okay. After a company decides to take money from you, the company will publish a document called prospectus in the newspaper, TV, or at the local stock market, anything. Now, very important that you have to read the prospectus, as it contains lot of details on how the company is going to use the money later on, the terms and conditions for issue, the interest rate, the number of years after which you will be paid, the face value, etc. So this document is very important. Then the company will distribute a form which is known as an application form. You will have to fill this form regarding how much money you want to invest into the company. Which means, say if you want to invest 5,000 rupees or dollars, you will have to fill 5,000 in the application form, and along with the money you have to go and submit it to the company, required person within the company, and they will issue what is known as a debenture certificate to you, which we saw on the first slide. You will be required to pay an installment known as application money immediately when you buy this form. It's not for free, and it's not just paper cost, it is much more than that. Like if the company issues a debenture of 100 rupees per debenture, then at least 5% is what law says should be the application money. Now if the company doesn't accept from you, or doesn't accept money from you, doesn't want to take money from you, then don't worry about your money. It is safe. It will be returned to you. It will be refunded to you through the account you have given in the application form. Now let us understand the application form a little bit. See, this is an application form. Now I can't draw in this, so please take note of the arrow, mouse arrow, and follow up, as I'm going to tell you the important features of an application form, or important information that you need to fill in an application form. Well, this you see is a company that is issuing debenture, or that wants to raise money by accepting money from the general public. You see this? This is the date on which issue opens and issue closes. What does that mean? On this date, April 16, 2014, the company will start accepting applications from general public. On this date, the thing will close. No applications beyond this date, May 16th, will be taken up, or will not be taken up actually. Now all these informations are not related or not necessary for an applicant. The first applicant, or you have to give in your name in this, your date of birth, name of a guardian if you are a minor. If you are a minor, then you have to write in the name of the guardian, as guardian is the one who has the power to sign. You do not have the power to sign. Anyone below the age of 18 is considered a minor in India. Address, PIN code, which is compulsory, mobile number, email, second applicant, third applicant, investor category, category 1, 2, 3. Now you may not see this in every application form, but here they have lots of categories. Basically what they're trying to categorize is that if you pay for a lower number of time period, then the interest paid to you will also be lower. This is very important. This information, although is not highlighted, is very important, because you have to give in your bank details, so that in case the company does not accept money from you, it has to refund in this bank account. Also, interest amount and maturity amount, which means the amount that will be repaid to you, will be through this bank account only. They will not pay by cash. So this information, although given in a very small area, is very important. Now please, you have to read the prospectus clearly so that you can choose your category very clearly. In the application form it will not be given in so much detail. You have to give your PAN number depending on the laws of your country, and you have terms of issue. Again, this will not be in detail. You have to look up on the prospectus for more detail. So that is it. Now that we have seen the important elements of an application form, can face value and issue price be different? First, you have to understand what is issue price. Face value is already known to you. Now, what is issue price? Issue price is the price that they demand for their debentures. Price that they demand for the debentures. Now, you may have a doubt. Isn't that the face value? No. I said face value is only the printed value on the debenture. It is not necessarily the issue price. It can be same, but not in every case. Let us see. Yes, they can differ. Now I want you to imagine antique coins. Okay, their face value is small, really small, like coins that had been crafted some 20,000 years before. Their face value is really small, might be just 1 rupee or $1 or 1 cent, whatever, but the actual value when they are auctioned is damn high, right? They are sold for so high value. That is what face value and actual value represents. Similarly, a very good company can have high value of debenture or high issue price as value or worth of the company grows. So if a company grows more, its issue price will generally be higher. Its issue price will generally be market price. Okay. Face value is however fixed. It does not grow with the company's growth, but it may be worth to pay the market price if you think that the company will grow, because after some time you can sell the debenture off at a higher price too, right? Yes, debenture is just like goods. You can sell it. You sell off the certificate for money to another person, then he will be entitled to the money at the time of repayment and also interest thereafter, and not you. Okay, it's evident. So now we have understood that we have to read the prospectus very clearly, and also have understood that you have to submit the application form properly. Now that you have invested the application money, which is the money you need to pay to buy the application form, you will be given a certificate in your own name. You may have to pay the entire amount at starting itself at market price, but only face value will be printed on the certificate. This is to be noted. Only face value will be printed on the certificate regardless of whatever amount you pay. The company may even ask you to pay in installments, and you have to pay in installment. For this, you will be periodically, whenever the company needs money, the company will send you a letter asking you to pay this much amount within a particular date. Okay, before going to interest, let us understand debenture certificate in a little bit more detail. I hope the things are clear to you. You see this? This is the face value. Now the person wants to invest in 100 debentures of Euro 5 or Pound 5, which means he's going to invest in 5,000 units of the currency. He's investing 5,000. Okay, you can clearly see that only face value is printed on the debenture certificate. There is nowhere market price is printed, right? So that is it. It's just like buying, as I said in the example before, just like buying an antique coin. Only face value will be printed on the coin. Just because you pay higher, nothing will be printed on the coin, right? Same, similarly. Now let us go forward towards learning interest. Now interest is a periodical payment you receive for investing into the company. It's very safe because you will receive the interest from the company even if the company is suffering loss. Unlike equity shares dividend, dividend is received only when you earn, when the company earns profit. So don't worry. If a situation comes where the company will have to pay to many people, you will be ranked higher. You will be paid first before the equity holders. So don't worry about that too. So since there is safety for interest and the repayment value or the redemption value is what we call, it's a very safe investment. Please again note that interest is as paid as a percentage of the face value and not the market price. Also, it will be paid periodically, unlike the redemption value, which will be paid only after a certain number of years. No, interest will be paid periodically, every year, every half year, etc. Make sure you read the prospectus so that you know when interest will be paid. When will I be returned? When will my money be returned? Read the prospectus. There will be a date when your money will be paid back to you. Also read the mode of repayment to you, whether it is through bank or whether do you have to surrender the certificate at their office and then get it by cash. Debenture over equity shares. This is a very subjective decision. That's up to you to choose. Okay. Debenture is less risky, and whatever is less risky has lower return. Equity has higher risk, so it has higher return. So it's a trade-off between risk and return. So that's for you to choose. Now thanks for watching, guys. Hope you understood a thing or two about debentures. Please subscribe to my channel to be notified via email for the upcoming videos. Like would really be appreciated. Also every like and every view, every share and increase in watch time is actually pushing up my video in the search engine so that the other people can also look at it. So please, if you watch it and if you like it, don't forget to like. Also we share a lot of stuff in Facebook and other social media. I think this is worth sharing if you feel it is worth sharing, right? So please don't forget that also out of laziness. Please, please, please. Thanks for watching. That's it, guys.